What's happening, people? I hope everybody's having a brilliant week today. I do want to welcome you back to my channel once again. Thank you so much for joining me. Today, we're looking at advanced market structure. Okay, so if you guys did not watch the beginners market structure video, link will be at the top. Just tap on the I somewhere at the top, or even in the description. Link will be somewhere, guys. Uh, I do want to ask you guys to comment down below what you guys thought about the beginners market structure. It was just the most basic explanation of what market structure is and what is the importance of market structure within the markets. Without further ado, let's actually get into this video. Okay, so what we're going to be looking at in this video, first of all, is a break of structure. Where does structure break and when does the trend start to change into the opposite side? Okay, and then we will also look at complex pullbacks within this video, and then what we will also be doing is looking into a trend within a trend, so different time frame analysis. Okay, so guys, let's just look at this. So this is going to be the uptrend, what I'm drawing right now. So higher low, higher high. Okay, I do want to mention something that I forgot to mention within the beginners video. This right here, this higher low only becomes a higher low once a new higher high is formed. Okay, so if this happens, if this happens right here, and this is and price action pulls back, we cannot definitively say that this is a higher low as of yet. We can only call it a higher low once this happens and a new higher high is then made. Okay, so in an uptrend, a higher low is only formed once a new higher high is made. And then what happens? You move this line here, and then you simply move this line here. So your key levels change. Okay, why do you do that? So what I want you guys to take note of is that I am moving these two key levels. The reason why I'm moving these two key levels all the time is because when a higher low in an uptrend is broken, that is when trend or the structure starts to shift to the opposite end. So for example, we get in a pullback right here, higher low or potential higher low. We don't necessarily know that it's a higher low as of yet. We then get a pullback, we get a push up, a higher high. And what do you do now? Now you adjust your key level right here to the last higher low. So as I explained, let me type this here. So we're going to call this a BOS, which is break of structure. It simply means the break of a higher low or lower high. Okay. So looking at what we have right now, we have an uptrend. Price is moving up. Price created a new higher high right here. Okay, this right here is our higher low right now, guys. So in order for price action to break structure, what you would want to see from this is price then breaking this. And when that happened, guys, this is what we call a break of structure. Okay, this right here is called, I'm just going to say BOS. Okay, let me delete this. This right here is a BOS, or betterly known as break of structure. Why is the break of structure? As I mentioned to you guys in the previous or in the basic video, just explaining what structure is. Explaining what structure is in that video, you know that an uptrend is made of higher highs and higher lows. Okay, so once in an uptrend, once a higher low is violated and taken out, guys, in this example, as you can see here, once a higher low is violated and taken out, what happens then is that price action then starts to shift to a downtrend, and we are now looking at lower lows and lower highs, or we anticipating that price action is going to start to form lower lows and lower highs. So that means from this whole structure right now, so now we formed a higher low, formed a higher high, we taken out this higher low, forming a potential lower low. Okay, so remember what I mentioned on the first video. The first video mentioned that a trend needs to be confirmed when when a low or a high is actually taken out in the market. So this is a break of structure showing that there is intent from sellers. Bear market, okay, break of structure from bullish to bearish. We break in structure and we change in bearish. Okay, when this lower low is taken out with this move right here, what that means, and we form this new lower low, what that simply means now is that we are now within a bear market. Okay, and now you can only start looking for sells, guys. So that's what a break of structure looks like when we're changing from bullish to bearish, guys. So where is the safest place to start looking for sells? It's once this lower low is broken with this impulsive move right here, and a pullback happens. Okay, let me delete that. And a pullback happens back into this region for a retest, and then we find a new low in the market. Okay, so you looking basically to enter and to take this trade down from here, the break and retest level. Okay, that is the safest area to enter in the market. Okay, however, a lot of people will start looking for sells at this region because of the intent that this has shown. We have broken the last higher low in the market, breaking structure, thus turning structure from a, let me do this, thus turning structure from bullish to now bearish. And this right here, this intent shows us that we could very well continue down. Okay, so that is breaking structure from the upside to then go down. Let me show you guys what it would look like if we were to be in a downtrend and then go up. Okay, so now we form in a low, we form a lower high, form a lower low, form a lower high, form a lower low, lower high. So as I mentioned, guys, within structure, you have lower lows and lower highs, higher lows and higher highs. This is when you want to take the notepad out. You get a break of structure in an uptrend when a higher low breaks. Okay, when a higher low breaks, that's the only time structure then starts to change and shift to bearish. When a lower high breaks in a downtrend right here, when a lower high breaks in a downtrend, when the last lower high breaks in a downtrend, that is when price then shifts from being bearish or being a seller's market to now being a buyer's market. And what you're anticipating is either a retest there and price to confirm once we break this level, as I mentioned earlier. Once we break this higher high, we then confirm and we form a new higher high. We then confirm the bullish intent, or buyers are now completely in control and we are in a biased market. We are now in a bullish market. Okay, what I want you guys to know, so now somebody asked me, okay, how do I determine where the higher low or the higher low or the lower high is? This is a simple technique that I use, guys. In a downtrend, what you want to do is you want to notice what the lowest point in the market is. And when you have the lowest point in the market, I want you guys just to stick a line on that lowest point in the market, okay? When you stick that line on the lowest point in the market, I want you guys to look back on that push or the intent or the impulse move that actually caused this low in the market. And I want you guys to then, so I don't just want you guys to place a line on this. I want you guys to pull because the way I usually do it is I pull a box. I'll show you guys from the close of the candle to the low of the lowest wick, okay, of that region right there. So that's going to be my low. And then what I'm going to do is I'm going to be looking. So this is the last low in the market. What I'm going to be doing is I'm going to be looking for where that move actually began, okay? So where that last lower high was. So usually a pullback will, to me, needs at least two candles in the opposite direction. So because we are in a downtrend, you're going to need at least two bullish candles here for it to actually be a pullback. So when you do see two bullish candles here and this then pushes down, what you can then do is use the same method you use from the highest wick to the body, and then you draw that right there, and that's going to be your zone. That's going to be your high, your lower high that you're going to anticipate if price is pushing higher to then break that. And when price breaks that, what you're going to be anticipating is that price is now turning bullish, okay? So that's the break of structures respectively for bullish markets and for bearish markets, okay guys? So in terms of us actually being able to trade this, I know I didn't speak about trading market structure, but I do want you guys to know that you are only looking for sells, guys. Let me use this. As long as price stays below this last lower high, as long as price stays below that last lower high, you are only looking for sells. You are not looking for anything else. And the same with a bullish market. As long as price stays below or above the last higher low. And I'm going to show you guys this with the complex pullback. Before we move on to the complex pullback, I do want to mention this, that as long as price is below the last lower high or above the last higher low, you are only looking for sells below the last lower high, unless we actually break it. And you can see it's a clean break. We then get a retest, and that's why it's the best to just wait for that break, the actual break. So when you get a break, guys, when you get a break of a level of the lower high, the reason why we wait for this to break and to show us that we and to form a new higher high is because price can just break this and then go back inside and then continue down. So that's the reason why you wait for this third leg. So it's a 1, 2, 3 type of move. And when you see the third leg happen, you can then start to anticipate that when you get a pullback, whether it be to there, whether it be to there, as long as it stays above this last higher low, anywhere in here, you can anticipate buys, because now this higher low being broken has now confirmed that we are in an uptrend, and this right here is now our higher low. Okay, remember I said that you cannot use a higher low as a higher low until a higher high has been formed, and in this case the higher high has been formed, guys, right here. So guys, it's not that complicated, but it is somewhat a bit difficult to understand, but once you do get it, you get it. Let me run through it again. So for bullish break of structure, what you're looking at is higher highs, higher lows forming in the market. Then you will see that price will push up, and when price breaks this level right here, then and only then, when price breaks a higher low in the market, then and only then will structure then be changed. Okay, so just remember, how do I know where the lower high is? Notice the high in the market. Look for the current highest point in the market. When you find that highest point, you draw the box on that highest point. You then going to find the origin of where that highest point came from. And then once you find that origin, that's going to be the higher low in the market. And until that higher low is purged or broken, we are still in a bullish market. Okay, so now let me draw the bearish market one more time. We have lower lows and lower highs, and then we break this right here. We break our last lower high in the market. How do I know when it's lower high? As I mentioned, you're going to notice where the lowest point in the market is at that time on that specific time frame. You notice where the lowest point in the market is, and then you're going to find where exactly that lowest point or the origin of that move starts. And as I mentioned, you need this to be at least two bullish candles. I don't care whether it's 3, 4, 5, 6, 7. It needs to be at least two bullish candles. If it's not two bullish candles and it's one bullish candle, it's not a pullback. It's just a pause in the market, guys. So you need it to be at least two bullish candles for it to be confirmed as a pullback within this downtrend. Okay. So then you find your lowest low in the market. You find the origin of that low where that impulse move started, and that will be your lower high in the market. What you will then do is once price actually breaks, you wait for price to pull back and to confirm that it has broken this level, to confirm that we are in an uptrend. And when this has happened, you're going to wait for a simple pullback, and then you're going to start looking for buys at this level here. Now, it's not going to be as clean as that, but I want you guys to understand this this concept of market structure. That's why I said the advanced course or the advanced bit of this market structure is a bit it's a bit detailed, so you need to understand the detail of market structure and how it breaks in order to know what you're doing for that specific day, especially day traders. If you are a scalper, a swing trader, and you're looking at higher time frames, it's the exact same. Market structure doesn't change. The price is delivered systematically across all time frames, guys. So I do want you guys to know that the same thing happens on all time frames, whether it be 15-second, 1 minute, 5 minute, 3 minute. It doesn't really matter on what time frame you are on. Market structure stays the same. Price gets delivered the exact same way. So it really depends on where you want to, or on what time frame you want to be trading on. So guys, let's talk about complex pullbacks. What is a complex pullback? Remember, I mentioned to you guys that the break of structure only happens when a higher low is broken, right? When a higher low is broken. So I want to show you guys something. What is a complex pullback? So you have this playing out, you have a confirmed uptrend, this being taken out, this being your higher low. We then form a new higher high. So our higher low is right here, right? What happens now in the market is that this happens. Now I want you guys to take a moment. I'm going to ask you guys a question. You pause the question. Then before I actually pause the video, then before I actually go on, you write your answer down. Comment your answer down below. And then from there, you'll listen to the video again, and then you'll see if you're right or wrong. Okay. At this point, what do you think price is? Is price bullish or is price bearish, guys? After what I explained to you guys, is price bullish or is price bearish at this point? Pause the video. Pause the video for a minute. Type your comment below. This is you're gonna be saying for scenario number one. Just type scenario number one, and then from there, what you'll say is bullish or bearish. Scenario number one, structure bullish or bearish. That's all you're gonna be saying, guys. Go ahead. So now I'm gonna answer that question for you. This is what we call a complex pullback, guys. Remember what I said, that as long as price stays be above the higher low, we are still bullish, guys. So price can do this all the way down. Price can form a downtrend all the way down, and people can start selling. And before it actually reaches this, or before it actually breaks this, we can either come right down to this and form a double bottom in an uptrend, or before we even reach this area, what you can then see is price does this, and people will start selling this, saying, oh, it's an uptrend, or sorry, it's a downtrend, it's a downtrend. Can't you see lower highs and lower lows are being formed? Lower highs and lower lows are being formed. Things are getting taken out right here. We're getting break and retest, perfect break and retest, and let's just sell the market, sell the market, sell the market. But what they're not realizing is this is what I call the complex pullback. It's really structure within structure, guys. So this can happen on any specific time frame. You can see this on the 4H, you can see it on the 1H, you can see it on the daily. What matters, guys, is that you can be selling this whole thing right here. This whole thing, in all honesty, you can sell this if you find that it fits your strategy. sorry, if you find that it fits your strategy, guys, you can sell this market. However, what you need to keep in mind is that you need to get to break even, or you need to protect your capital as soon as possible, because we are still in a bullish market. Okay, as long as we remain above this higher low in an uptrend, we are still in a bullish market, and you still expecting price expectation, guys. I want you guys to start calling this price expectation. You still expecting price to go up as long as we remain above this higher low. Now it's a completely different thing if price then started to if price broke below this, your price expectation then would be that we're going to get a retest of this level, and we're going to continue down to confirm the downtrend, and then you know that we are going to go down. But as long as price stays above this higher low, guys, what you are looking for is buys. Doesn't matter whether there's a decent counter trend. If you are capable of trading that counter trend, by all means go ahead and trade it. If you are not, then stay away from it. Just stick with price expectation of market structure being up until it is actually violated. Okay, guys. Now let's look at scenario number 2. Scenario number 2. Right. Oh, so now we're in a downtrend, guys. Scenario number 2, we're going to be doing the exact same thing. We're forming lower lows and lower highs. We are in a downtrend. We just form this. We form this lower low. We have our previous lower high in the market. You notice that this is the lowest low. You can clearly see that we made a new low. We took this out. We have a perfect break and retest level. What we then start to do is we pull back to the previous break and retest level. We do this. What do you guys think this is? So now what you're going to go ahead and do, you're going to pause the video. You're going to be naming this number 2 on in the comments. Scenario number 2, do you think this is bullish or do you think this is bearish, guys? What do you think this is, based on everything that you just learned with the bullish scenario, and then also with the break of structure? What do you guys think this is? Pause the video, go ahead and answer that down below. Okay, perfect. I hope you guys answered it, and then now I'm going to answer that question for you. So you're getting more pullbacks into this region. We're getting this, and I do want to confirm, guys, that price is still bearish, and that right there is what you can expect to happen as long as price stays below this area right here. As long as price stays below your last lower high, you can see an uptrend form, and people can start often intraday day traders and scalpers will be able to trade this. I myself will be able to trade this because of the type of trader that I am. However, what you do need to realize that price is still in a downtrend, and this will happen on the 1 minute a lot, guys. A lot of people used to ask me, how do you trade the 1 minute? How do you trade the 1 minute? Well, I only trade the 1 minute with the trend. Until this right here is violated, I will not be looking for buys, guys. That's the way I trade the 1 minute. It's sometimes you will see that price is starting to form an uptrend until we get to this level, but I do want you guys to know that this is so powerful, because a lot of people say, oh, but I'm trading with the trend, but what they're doing, they're trading with the immediate trend, but they're not noticing what the real trend on that specific time frame is, or even on the bigger time frames. I'm not really too big on multi-time frame trading. If you do trade multi-time frames or a ton of time frames on one pair, all good. If you trade one time frame, it doesn't really matter. Market structure is really market structure. It's the same thing. It's systematic. Price, as I mentioned, price is delivered systematically across all time frames. So guys, I do want you guys to make notes on this. Make notes that price only breaks structure, or price only becomes bullish, and you're only really looking for buys once this happens, guys. Once price breaks this right here, Once price breaks this point, which is our lower high, we get a retest and you confirm that we are now bullish. That's when you start to look for buys. Oh, but Marcelino, didn't price action move too far? I would say price never moves too far. As long as price is bullish, price is going to continue moving up. And I can show you guys that on different time frames. I can show you it on the weekly, on the daily. As long as price is moving up, price is moving up until it violates structure, guys. Just remember this, that the most important thing that I taught you guys is break of structure, where to notice where structure breaks. Noticing that you can have a complex pullback, meaning that you can have something that looks bullish in a bearish structure, but we are still below the lower high in that bearish structure. And as long as we are in below that lower high in a bearish structure, we can still start to fly down to then create a new lower low. And that should always be your expectation in a bearish structure. So if you're trading on the 15-minute based or from the 4-hour, for instance, and you're noticing that the 4-hour is coming to a key level in a downtrend, what you're then going to start to do is saying, okay, once this 4-hour comes to this key level, we start to slow down, we see weak rejections, we see a engulfing candle. What I can then do is go down to the 15-minute and start anticipating the price is going to continue down with that move. Even though if price has been counter trending, you need to know where the key areas in the market is. Okay, so what I do want to show you guys is how price trends differently on different time frames, but how you trade it together. Okay, so I showed you guys break of market structure or break of structure. I showed you a complex pullback, and this all works on all different time frames. It works on one specific time frame. It depends on how you really want to use it within your specific trading plan. So what I'm going to show you guys now is this is the 4H in a bullish time frame. So we're making higher highs and higher lows. Okay, let me not have that on. This will be the 15-minute, guys. I want you guys to realize what's happening on the 15-minute. This is what will happen on the 15-minute, guys. And this happens weekly, it happens monthly, it happens daily. Break of structure on the 15-minute, retest, continuation, pullback, continuation, pullback right there, continuation, break of structure on the 15-minute, and now this is just so we have a break of structure on the 15-minute. You can see right here. So guys, I do want you guys to note, if you are going to be trading 4H, 1H, and the 15-minute, one 4H candle have four 1-hour candles. One 4H candle has 16 15-minute candles. I do want you guys to know that, take that into consideration. So one 4H candle has 16 of them. So if you see 3 4H candles just pushing higher, that's going to be 3 times 16. So it's going to be a decent uptrend on the 15M. That's going to be higher lows, higher highs, higher lows, higher highs. So what a normal pullback on the 4H, as I'm demonstrating here, will be a complete downtrend on the 15-minute. And when you see a break of structure on the 15-minute back to the upside, what you can then start to expect that on the 4H, this will probably be your higher low in an uptrend. Okay, guys, and that's the way you need to correlate time frames with market structure. And when this happens right here, you now have a confirmed bullish structure on the 15-minute and on the 4H being, you now confirming things. Do you know what I mean? So now you're confirming that price is not only up on the 4H, we have an uptrend on the 4H, but also price is up on the 15-minute, and now we can start to capitalize on those intraday buys within this bigger uptrend, and you can get higher RRs in that manner. Okay, so now you can start focusing on catching bigger rewards or bigger risk to reward trades when you combining the 4H and the 15 minute, even the 1 minute, if you want to get really good entries, guys. So this is how it works. Even if you want to say this is the 15 minute and then these little trends is the 1 minute, it's exactly the same because that's the way it happens. So that's a trend within a trend, and then that's just a normal pullback. On a normal pullback on the 4H will be a complete trend shift or break of structure on the 15 minute. A normal pullback on the 15 minute or on the 30 minute will be a complete shift or break of structure on the 1 minute, guys. Important to note. So now let's go into the charts. Let's see first of all if we can notice. So I didn't check any of this beforehand. So what I'm gonna do is let me find a chart that has been okay. So as you can see, this has been ranging for quite some time. So let me just find a chart now that hasn't been ranging per se. Let me check gold. Okay, gold. So you can see gold has been moving up, making higher highs and higher lows. So a higher low, this only is a higher low once this area breaks above this. Okay, have a higher low, higher high, higher low, higher high. So you can see that this higher high. So guys, remember what I mentioned. How do you determine what a higher low is? You're going to look for the highest point in the market. You find the highest point in the market. This is how I draw my zones as well. So you find the highest point in the market, you draw your zone from the highest wick to the highest body. You then go back and you find the origin of where that move start. So I'm looking for the origin. What do I see? I see this right here. I see 1, 2 bearish candles. Okay, I look for the lowest point of that move and I find it right there. What I'm gonna do now is I'm gonna mark it from about there to there, and that's gonna be my lower high in the uptrend. So as long as price stays above this area in the market, we are bullish. As long as price stays above this area in the market, we are bullish, guys. What did price do? Price came up. We were supposed to now create a higher low and then go up. What did we do? We failed to go up and create higher high. We then started to take price out and we formed a new low in the market that took this higher low out. What you can then start to do is start anticipating price to go down, and that's what happened. You can see price went back inside. It wasn't a perfect retest, but we stayed below this. This right here now becomes our high that needs to be broken to shift price back into bullish territory. This right here is now what you are looking at as a area in the market. When price pulls back, we can look for a double top, or you can look for patterns within a downtrend. And what you can see, price stayed below this and then we continue down, and now we are officially on the 4H in a downtrend, and you can start shifting your key levels as you go down with price. Sorry guys, let me just have a bit of water. I didn't expect to be speaking this much, but I did want to show you guys some live examples of this. So you have this low in the market. We then have this pullback. We have a low that formed here, which is lower than this low. So that now means that that's our new low. And price pulls back 1, 2. So you need at least 2 candles in the opposite direction for it to then be called a pullback, and for it to then be called a lower high once price makes a new low. So what can you see here? If price does close below this level, you need a closure below this level. So if price pulls back and closes above here, I wouldn't necessarily call this a lower low, because I need price as the body. I need the body of the candle to close below this previous low, and then this will then become a lower high. Okay, and this will then be your area in the market where if price was to start to break above, let me use this, if price was to start to break above this right here, okay, that's completely the wrong thing. If price was to start to break above that and did that, what you will then start to do is continue looking for buys on the 4H of gold, guys. So that is a bearish example of how to actually mark lows and mark lower highs. Okay, and then that's also a example of how price broke market structure, and then how we formed a new trend following that break. So now let's see if we can actually find a complex pullback and then a break of structure in that complex pullback. There's nothing really there, nothing there. I don't know, but the USD pairs are just ranging. It's just ranging for real. So let me see. Okay. Nothing really there. Okay, let's use GBP USD. I don't think there's gonna be any complex pullbacks, but what you can note is that price had formed highs that we failed to break here. Price had formed lows that we failed to break. When price started to fail to break above an area in the market, you can then start to anticipate price to continue down. Okay, guys. What I did want to mention too is that in a complex pullback, when a complex pullback is formed, so you have this is your market structure. So now you have the complex pullback, guys. You have this right here. And as long as we above this, we are good. Where will at this point in the market, where will your break of structure be? Because remember, we're forming a new, what seems to be a new downtrend down, but as long as we stay above this, where would you then be confirmed to be bullish again? The minute we break above this area here, the minute we break above our last lower high, sort of quote unquote lower high, you are then bullish again, guys. And that is so important within this complex pullback. And I do hope that everybody watched until the end, because this is one of the most important aspects within this complex pullback of market structure. Because a lot of people think, okay, we're staying above here, or we price expectation as long as we're above here is bullish, right? But now we're forming this downtrend in an uptrend basically, but they won't necessarily know when to start to anticipate buys again. This right here is your signal. Let me mark this. This move right here is your signal to start anticipating buys again. Once the last lower high right here, once the last lower high in this small trend within this uptrend is broken, that's when you start anticipating price to then go up, and you start looking for that continued buys, and that's when you can start to anticipate big moves, because now you're anticipating price to create a higher high. That's your expectation. That's price expectation right there. So price has taken out this movement right here. We're taking it out with momentum. We came back for a retest, and that's where you found your entry, or you found your entry slightly above here, and you said, okay, I'm taking it up to a higher high on this big move, and that's how you're going to increase your RR. And similarly for bearish structures, guys, let me show you guys for bearish structures, and then I'm going to end. Okay, so we have, let me get this, we have the bear structure. Okay, and now we have the complex pullback. We have the complex pullback right into here, into that area right here, which is our lower high. and this is now a double top within a downtrend, guys. Let me leave a little bit of a nugget. This is a double top within a downtrend. When is confirmed buys here now? Once we break above this level like that, once we took this out, we get a pullback into that area. You can then start to anticipate. Now, price won't move this clean necessarily. Price will not move this clean when we move into the downside. Let me just mark this. That's our lower high. That's our higher low within the downtrend. Once price breaks this, guys, that's when you can start anticipating price to then move to the downside once again and form this lower low. You can even just target these, which is what I usually do, just target these for safety purposes. However, what you can do is just target slightly below this, because there's usually buy stops, or not buy stops, sell stops, and stop losses below this. Okay, guys, that is a big secret in the market. This is one of the biggest secrets that a lot of people don't speak about, especially when it comes to market structure, guys. This is the complex pullback, how to trade the complex pullback, understanding break of structure. Please, guys, subscribe, like, comment down below what you thought about the complex pullback. Comment down below what you thought about the break of structure within the complex pullback, and then what you also thought about the normal break of structure. This is the advanced section of market structure, and I do want to say thank you so much for listening until the end. Like, subscribe, and let me know what you guys want in the next video, guys. Thank you so much. Peace out.